Good morning, everybody. This is Brad Reed. I am a real life trader, and I'm here to remind you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. I have the wonderful blessing of being joined by my dad, Ed Reed. How's it going, Dad?
Hey, good morning. Going great. It's a wonderful day to be associated with real life traders.
Awesome. And I got a good buddy, Art, out in Salinas, California. What's going on, Art?
Yeah, good morning, Brad. Good morning, everybody.
Is it still dark outside in California?
It has some light starting to peek out there.
Well, Art, I really appreciate you and all the other folks on the left coast that have to wake up insanely early in the morning. But I know some folks they like to wake up early and get the trading done and then go to work after a couple of hours of trading. So I guess there's pros and cons either way you look at it. Today, I wanted to talk about the concept of where to put your stop, how to walk away from your trade so you don't have to babysit it. And I guess that reminds me, one thing that Jeremy Newsom taught me that actually improved my trade quite a bit. He said, Brad, once you get into a position, set your stop, set your target, and don't look at it for at least 30 minutes. And I've seen people, when they watch him trade, they'll be like, Jeremy, go back to your position. Go back, look at it. You have to watch it. And he was like, no, I have to not watch it. And it's true. If you watch your trade, it'll drive you nuts because all these little tiny ups and downs will make you set your stop in the wrong place or get out too soon or get out too late because you start reacting to the minor things instead of to the major things, the important things. But yesterday we got into this trade on JetBlue, and we were discussing where to put the stop because on my trading plan it says to wait for a definite rotation. I would call this down here a rotation, this up here a rotation, this down here, this low is a rotation, this high over here is a rotation. But while we were in this trade, this thing went from entry all the way up past 3R without ever showing a rotation. And then the discussion came up, well, where should I put my stop? Because I certainly don't want to give up 3R if this thing turns around and goes all the way back down, which it did. So where to put the stop? Now, I do have in my trading plan, once it hits a 2R target, to move my stop to break even. And that's why you see this stop here. And then I placed this stop because I saw this, what is that? It's close to a tweezer top, dark cloud cover, bearish counterattack. Man, I got to go review my candle patterns. I don't specifically right now remember the name, but this is bearish. When it goes white, 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 and then you have a black candle that's almost the same size and same location as the white. So I moved my stop to the 20 moving average, which was very close to this swing low. And that's when Art and I started talking about, well, where do you put your stop and how do you do the trailing stop and all that kind of fun stuff. So one thing that I was talking about is when I have to leave, and I have to leave my computer, where do I put my stops and how do I do it? I'm going to leave that there. I'm going to draw some more lines. Logix, which is the non-co day trading platform, has the ability to do an OCO, or order cancels order, which basically means you can put in two orders, link them together as an OCO, and then whichever one of those orders triggers first, it'll cancel the other one. And so the way that becomes useful is if I get into an order, and let's say right here I have to take my kids to the park, I get to take my kids to the park or go play or I don't know, for some reason leave the house, leave my computer for whatever reason, I can put in a stop down there. Let me see, let me change that to a stop. I can put in a stop there, put in one target, link them as OCO and walk away. But what if I'm going to be away for a long time? One trick that I've started doing is I'll put in two OCO orders. So in this case, I'll put in one CO order linking the target, the 2R target, and my stop. And then I can put in another stop right down here, or maybe I'll put it like 1 penny above and link this second stop with this 4R target. So that way, if it does hit 2R and continues on up to 4R, which this one almost did, I can get more of, capture more of the rotation up, capture more profit from the move that I had anticipated. Now, the counter to this is that both of my stops are down here. And if it does rotate back down, I get out very, very late. Now, recently, Logix, the trading platform, has put in a feature called a trailing stop. Art, tell you what, while I'm talking, do you want to type in the chat pane the link to the trailing stop, if you can find it? Nonco has a video, and if we have time, I'll actually pull mine up and show you where that feature is if I can. I'm not sure if it'll let me do it. At any rate, a trailing stop basically says you get to tell it, hey, if it ever goes down this much, get me out. And so in this case, let's see, 2R was 12 cents. So I'm going to draw a rectangle that looks like this. And that rectangle is actually 12. I'm going to make that 12 cents tall. So this rectangle represents 2R. And so once I set it, oh, can I move it? Yes. It'll find the high and say, hey, if it comes down to the bottom of this rectangle, it'll stop me out. Well, as you can see after this candle, it made a higher high. So it would have shifted up to there. So now my trailing 2R stop is no longer break even at 21.99. It's actually at 22.01. Then the stock retraced. Now it won't lower my stop when the stock goes down. It'll only change my stop when the stock goes up. So as it did continue to go up, it would have moved my stop to this price, 22. Let's see, that's 22.02 again. Then it would have moved it up here to 22.07, and it does this instantly. We're looking at 5-minute candles, but every time the stock makes a new high, it adjusts the stop to 12 cents or whatever you set it to below the recent high. And so once it made this high up here, it started to go down. It would have stopped me out somewhere around 22.10 instead of the stop that I placed, which was down here at 22.04. So you can use the trailing stop as a way to lock in more profits. And Art has found the video. Thanks, Art, for typing that in. So yeah, one way to put in a stop order so that you can walk away from your computer and not have to babysit your position is to use the trailing stop. Now, in the video that Art put there, the folks at Noncode demonstrate how to use an OCO order where you put in a target and a trailing stop. So for instance, let's say you got into this trade and then all of a sudden you had to walk away. You could put in a trailing stop, and as soon as you hit 2R, just say, hey, trail it by 12 cents, whatever happens, and then you walk away. And you can also say, hey, if it does hit 4R if it does hit 4R up here, then just get me out. So you would have to actually type in that order. What was that? 22.23, according to this picture. You say, hey, if it gets 22.23, dump my remaining shares, or you'd have to tell it sell 625 shares or however many it is. But if it doesn't hit 4R, or before it hits 4R, if it hits the stop, then go ahead and sell those shares there. So you can put in 2 sell orders, one at your target, one at a trailing stop. And that's just one way to do it. Another way, you can actually put in your stop orders and say, hey, put these 2 OCO orders in, and if it hits the 4R target, then cancel this one, sell half the shares at 4R, and cancel the other stop order, and any configuration you wish. So the way I used to do it, actually the way I currently do it, is I'll put in 2 stop orders very close to each other, and I'll have 2 targets. So I'll have 2 OCOs, each of them for half my shares. Art likes to use the trailing stop. One thing that I'm going to start testing is using a trailing stop and a target as an OCO. And if you want to know how I'm going to test it, come to reallifetrading.com, click on articles, and there's a link in here that says 7 steps to building your own trading strategy. Anytime you're going to change your trading plan, so for instance, you're going to use a trailing stop instead of traditional sell stops or buy stops, you want to test it first. So you can come through here. This will tell you how to test a plan before you start doing it with real money. Also, if you, on your trading plan, if you're keeping track of links, of pictures, and I'm going to pull up our trading documentation. As you can see for these trades, we keep a good record of these links. So I can come back to these pictures and actually see how would it have, what would the results have been if I used a different stop method, and see if the winners would have been bigger, if the losers would have been smaller, and I can actually do the math and I can compare the results. So that's the way I would do it. That's the way I'm going to test it. Arts, any words, any things I goofed up, missed, anything to add?
You know what, Brett? I wish I had something additional to add to that, but you pretty much covered exactly what I would have said too. That's exactly how I use it.
Cool. Art and I
It
have
couldn't
different
get
trading
any
plans,
different.
but-
Yeah.
All right. Well, thanks, buddy. I appreciate that. Appreciate you being here. All right, guys. Questions, thoughts, opposing views, type them in. Otherwise, I'm going to hit stop on the recording. And for those of you watching this recording, for more videos like this, go to www.reallifetrading.com. Thanks for watching. And as always, trade on logic, not on hope.